So in this video, we're going to talk about the chart of accounts. Now I'll give you a second to grab a seat. I know you're probably super excited. This is something that you think about and love to learn about all the time. So I'll give you a second just to settle down and then we'll dive into it. No, but on a serious note, learning about and understanding your chart of accounts is super important. It really is the foundation of your accounting infrastructure for your business. Let me first start off with reading just a basic definition of the chart of accounts, and then we'll dive into it. So the chart of accounts is an index of all the financial accounts in the general ledger of a company. In short, it is an organizational tool that provides a digestible breakdown of all the financial transactions that a company conducted during a specific accounting period, broken down into subcategories. Now, I know that's a mouthful, but let me quickly just break that down for you so it makes sense, and then we'll move on. So it's basically a tool, right? It's an organizational tool, a way to organize all of your transactions that go on in your business in a way that you can digest it, that you can understand it, that you can use the information. And it's basically taking the transactions and breaking them down into subcategories. So the subcategories obviously are all your accounting categories: cash, accounts receivable, payable, equity, revenue, expenses, all of those things. It's breaking them down so you can understand and see what is going on in your business. So now first what we want to do is I want to break down your chart of accounts into the 5 basic sections. That would be your assets, liabilities, equity, revenue, and expenses. So let's go through each of those individually, and then we'll dive into why it's important to have a good chart of accounts. An asset is anything that the business controls and has financial or economic value. So examples of this are obvious ones: cash, accounts receivable, equipment, inventory. These are things that have value that the business owns. Now, I want to be clear, full ownership doesn't have to take place for an asset to be on the books. Let me give you an example. Let's say you buy a piece of equipment, you finance it 100%. So you don't own the equipment. The bank owns it, or the institution that lent you the money owns it. But you still put that asset on your books. So you don't have to fully own it to put that on your balance sheet as an asset. That's an important point to remember as we're kind of walking through this. The next section is liabilities. These are debts that you owe to others or future obligations. The 2 most popular ones are accounts payable, which is basically all of your recurring bills and money that you owe people. And the other one is loans. So those are the 2 that are most popular. There's obviously other ones in there, but those are the ones that you see most often. Now, one example that's a little bit tricky that gets missed a lot is, let's say that I get paid up front for a service or a product that I'm going to deliver a couple months from now. Well, that money is actually a liability to me, because if I don't end up giving them that product or that service, I owe that money back. That is one that we see get missed quite a bit. So I wanted to quickly touch on that one that, like I said, is often overlooked. And then the last section is the equity section. Essentially, this is how much of the business you own. And I'll get back to that in a second. But if you sold all the assets of your business and you paid back all of your liabilities, what is left is the equity in the business. Now, I want to make a note here. The equity in the business is not necessarily the value of your business. Businesses are typically valued as a multiple of sales or cash flow or EBITDA or something else. This is just literally if you sold your assets, you paid off your debts, this is what would be left. So I just wanted to make a clear distinction between that and the actual value of your business, because sometimes people get a little bit confused with that. So those 3 sections, assets, liabilities, and equity, are the first 3 on your chart of accounts in that order, and that makes up your balance sheet. The next 2, revenue and expenses, are the next 2 sections of your chart of accounts, and those make up your P&L or your income statement. So first, let's look at revenue. That's everybody's favorite. That's essentially money coming into the business. It could also be referred to as sales. Now, I want to touch on a situation where money comes in to the business that is not necessarily revenue. So let's say I loan somebody money and they pay me back. That is not revenue to the business. That's simply a return of capital. Another situation would be if I'm the owner of the business and I contribute money as a contribution. That's also not revenue. That's just a capital contribution to the business. There's some other smaller examples of things that aren't revenue as money comes in, but for the most part, as money comes into the business, that's considered revenue. The next section is expenses, and these are pretty straightforward. This is money that's going out of the business. And there's also examples on the flip side of money going out that are not considered expenses. One is if I have a loan in the business and I'm paying that loan back, that is money going out, but that's not necessarily an expense. That's just paying back the principal on the loan. So that's not an expense. The other one would be typically if I'm an owner or a partner and I'm distributing money to myself, that's a distribution. That's more of an equity event. That's not an expense of the business. So those are a couple that are money going out that aren't considered expenses. But for the most part, money going out is an expense of the business. So those are the 5: assets, liabilities, equity, revenue, expenses. Sometimes people put cost of goods sold as a separate category. For this exercise, I'm not going to do that, but in case someone is out there saying, well, what about cost of goods sold? That can be its own between revenue and expenses, but we're not going to touch on that today. So those are the 5, and that is the order that you typically put things in on your chart of accounts. So now let's talk about why it's important to have a good, organized chart of accounts. As you look at your financials, your balance sheet, your P&L, and you start to do analysis, you want to get a clear picture of what's going on in your business. If your chart of accounts is all over the place, things are in the wrong place, they're named wrong, you're not going to get that good, clear picture. You're not going to be able to make good decisions. And then any analysis that you do is probably going to be a waste because things aren't in the right spots. So that's the first thing. One way to create more organization is to use a numbering system on your chart of accounts. So each account will have its own unique number. And there is a kind of a standard way to do this. Every business does it a little bit different, but there is a standard way to do this. I'm not going to get into that too much, but there's a lot that you can do with numbering. So let's say for our cash account, that's going to be number 1,000. And for our accounts receivable, that's number 1,100. And then we kind of just go down the line. Well, one thing that you can do is you can use any numbering system that you want. Let's say for the cash account, I do 1,000.01. And 01 means everything that relates to my Philadelphia office. And 02 means everything that relates to my New Jersey office. So maybe my first checking account is 1,000.01, Philly. My next cash account is 1,000.02, Jersey. And that's a way that I can break down information. Maybe then I do another decimal point, and then the next one is a business segment. So 01 would be, this segment A, 02 segment B, 03 segment C, however you want to do it. But what this allows you to do is twofold. One, it makes it much easier as you're referencing accounts as you're doing your accounting. Instead of having to write out the whole name of the account, which can get confusing, you can use that number that's unique to that specific account and reference that. Makes it very easy to track things. In addition to that, it allows you to do a lot more analysis and build out your system through the chart of accounts however you want. You can literally track things however you want in as much detail or as little detail. And then you can build out custom reports. Typically, you can do it in Excel and build out all of these custom reports based simply on the numbering system that you have. Now, where it becomes vitally important is to get things in the right buckets and in the right accounts as you're entering them in. If you have this crazy accounting, this crazy numbering system, but things aren't getting in the right places, now you're not really doing yourself any favors and you're just going to cause more problems. But if you want to do a really detailed numbering system so you can do customized reports and you get everything in the right buckets, that is really one huge advantage to having things organized and doing a numbering system. So having a good organized chart of accounts with numbers truly is the foundation of your accounting infrastructure. If that's a mess, then your bookkeeping is not going to work because you're not going to be getting things in the right buckets because they're already not in the right place. Then your analysis is going to be a mess because things aren't organized. So the chart of accounts is the foundation. You need to get that right first. I would encourage you, if you haven't looked at yours in a while, take a look through. If you're not sure what you're looking at, get a professional to come and take a look through. Get it organized and get it organized specifically for your business because you need different things. You need different information than the next business. And the chart of accounts is a big driver of that. So I would encourage you to take a look at yours if you haven't in a while and make sure that it's set up properly and in the best way for your specific business. So my question to you is, how does your chart of accounts look today? Have you looked at it in a while? Or is it something that you've just kind of set up in the beginning and haven't looked at it? I would encourage you to go ahead and take a look at it, make sure it's set up for you. If you have questions, we're always here to help answer. Be more than happy to do that. Thank you for watching. Talk to you in the next one.